bum 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 bum. I'm live on LinkedIn, I'm live on YouTube, and I'm on time today. Maybe 1 minute late. Sorry about that. If you can hear me on YouTube, please let me know. And if you can hear me on LinkedIn, give me a shout so that we can give you the show that you deserve. The show that you deserve. You deserve it. Let's go, ladies and gentlemen. Let me know. Let me know. People are live on LinkedIn and YouTube. If you can hear me, say something. If you can hear me, say something. If you can hear me, say something. People live on YouTube and LinkedIn. If I'm audible, let me know so we can begin. It is a good morning, right? It is a good morning. Hey guys, if you can hear me, say something, or I'll have to make this audio check myself. 1 second. LinkedIn is good. YouTube, what about YouTube? YouTube is good as well. So I will start. Perfect. Okay, let's begin. All right then. Boom 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 boom. All right, so we begin. Hello everybody, welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily dose of insights and analysis which don't lead to paralysis right before we start our day. So let's continue with our journey of reading between the lines things that are especially interesting and important in the world of business and finance. Let's go! Oh, but before we begin, we have to follow a tradition, right? You know the tradition of the simultaneous sip. And all you need for the simultaneous sip is a cup, a mug, a glass, a tank, a chalice, a stein, a canteen jug or flask, or a vessel of any kind. Pour it with your favorite liquid. Today I'm having coffee, cold. And join me now for the unparalleled experience. Here we go. Oh my God. Oh my God. Beautiful. Highlight of my day. Dopamine hit of dopamine hits. It's so nice. Awesome. You know what the simultaneous sip says, don't you? It says that you're not alone. It says that we're in this together. That's such a beautiful thing to say, right? It is such a nice thing to say.
Do you have a profile?
So we begin, let's. Ladies and gentlemen. Okay. Uh, Rapido is doing rate cuts to spur a fight in the food delivery space. So Rapido is entering all sorts of spaces. It began as a bike aggregator, essentially, which turned out really well for them. But then they expanded to cars, and now they're actually looking at food delivery space. Uh, well, and what they're doing is they have a fixed fee model. So they're trying out with a lot of ONDC play. Fixed delivery fees at 25 for orders under 450 for orders under above 400. Lower commission of 8 to 15% compared to Zomato and Swiggy at 16 to 30%. So a lot of people have complained about Zomato and Swiggy's extraordinary, exorbitant commissions. And the restaurant body has said that it's essentially a dead business because of these guys. Because let's say you start a cloud kitchen or a restaurant, you list it on Zomato or Swiggy, and what you see is a straight 20-30% cut as far as the whole uh, commission is considered. But for getting those orders, you got to put some ads. That's 20% of revenues easily. So you're spending like 30% to get the uh, to service the order, and then 20 to 30% to be visible on the platforms. Now, a lot of people who start restaurants and cloud kitchens start them because the gross margin looks high. Uh, food makes the food you sell for 100 rupees costs some 35-40 rupees, right? So people think it's a very high margin business. But then when they enter the food business, they find out that there's rent, there's electricity, there's staff, everything. But even then, people think that it's gonna be a 50% or a 45% gross margin business. And with that 45%, 50% gross margin thought, people enter the restaurant, food making space, right? But when they enter the food making space and they list on Zomato and Swiggy, they find out that 30% is going straight to deliveries uh, for every order. So now the gross margin stays at somewhere around 70-30%. But then they realize that they're not being able to sell anything if they don't advertise. And advertising of that food also costs 20 to 30% of the revenue. So by the end of it, they're essentially making no money, or they're even losing money, because if the fixed costs are high, if the equipment cost is high, that is never taken care of by the gross margins, right? So you have like 40% as the cost of goods sold, then there's 10% electricity, or let's say staff or whatever running expense, that comes out to be 55% of the revenue, so to speak. Then you think that you're going to make 45% in gross margins, but then when you enter Zomato, it takes away 25-30% straight. Then you're left with 25%. You say, oh, I can still make some money, right? I can still hope to make some money. But then, you don't get orders. So for getting orders, you essentially pay these platforms, and that takes like 20% of your revenue. So at the end of the day, restaurant becomes a dead business. Uh, which is why you must have seen that restaurants have a very high turnaround rate. Very high, extremely high. So restaurants just open and then close in 18 months. 2 years, 18 months, you will close. So I'll give you an interesting thought experiment. Do you, if you come from a city where there was a market, an open market, not a mall, okay, unbranded neighborhood market, there must have been shops that you used to see when you were very young, let's say 20 years ago. There were some general stores, some confectioners, they were there, you know. clothing stores, they're still there. But you would never see a restaurant holding on for that long. In the same markets, you will see clothing stores, you will see confectioners, you'll see a lot of people holding on to their place, but not restaurants. That will be very rare because restaurants are extremely hard operationally, and they're extremely hard to run now more than ever because of this. So Rapido's rate cuts is trying to get to that industry, and let's see, Rapido did very well. So in 2017, I wrote an analysis why Uber and Ola's business model is not for India. It's screwed, it's never gonna work in India, is what I had written, at least for the foreseeable future. So a lot of people at that time, in the startup and VC space, used to fake US accent while say, I don't own a car anymore. Oh my god, Uber is so amazing. You know, I don't even own a car anymore. And I'm like, okay, sure, sure. And then, a lot of things happened, and I ran into somebody whom I met like in 2017, 16. And like, hey man, do you own a car now that everything has gotten screwed with Uber and Ola? I'm like socially like that. I'm not fun at parties. So I did ask him, and nothing of that worked. And he was very embarrassed. And he should have been, like all those people. And the reason why I had said that Uber and Ola don't have a chance in India was because uh, India is not a cab market. Before Uber and Ola, there used to be Meru and a lot of people who Meru got acquired by Mahindra, and they used to be uh, 20, 50, sorry, 250 crore, 300 crore business, cars on rent, and so on and so forth, 100 crore, 200 crore, and so on and so forth. But the money that Uber and Ola started gobbling up, they raised over like 30,000 crores, collectively, even more. So, uh, I was like, this market is never going to be that big. Never going to be that big. Just because you're throwing money at the companies doesn't suddenly make the market bigger, right? So people are like, no, everybody loves Uber. Oh my god. And I'm like, sure, people love Uber, but that's because people are the service is getting discounted, right? They're not paying the fair price of the cab. So everybody loves Uber because the local auto guy is more expensive than an Uber, right? So of course he loves Uber. Oh my god, but drivers love Uber. But yeah, sure, drivers love Uber because they are being incentivized. They are making 1 lakh rupees plus as drivers. So why would, and none of that money is coming from the business model itself. So India's per capita income in 2016-17 was less than $2,000, $1,800 or something, right? And I said, even if it goes up by $2,500 to $2,500 or $300, $3,000 or $3,500 or $4,000, even then India wouldn't have enough people to support such a business model. India is not a cab hailing market. So a lot of people used to laugh at these outrageous things and so on and so forth, because the thesis was that India is essentially, unfortunately, a garib country, and they will never be able to pay the fair price of a cab at this scale. Sure, I mean, if it's a 200, 300 crore market, it's given, it works. But it doesn't suddenly become like a multi billion dollar market in India. That was the point, right? And that point proved to be true now, like 15 years later or so. It's done, right? Ola cabs is a dead as disco business. Uber doesn't make money. Uber has essentially become a GCC in India, and the entire model has proved to be like a just putting dollars on bonfire, right? And everybody was wrong. Everybody was wrong. Despite everything that these people said, despite all the money that they raised, it was all wrong. But when I saw Rapido, uh, it made sense because it was bikes, right? Now bikes are much cheaper than cars, and I thought to myself that this makes sense. Even if they are more inconvenient, or they have propensity of getting hit by accidents and stuff, it's possible that people take more bikes, and bikers will also be able to make some incremental money as far as this is considered. And that proved to be right, because Rapido raised less money than Uber and Ola, but at the same time it was being able to uh, grow better and make more money. So it was at net level better. But then it also came into cabs, which I'm not sure how it's gonna pan out. And now it's into food delivery, which is very interesting. So that's fun. But yeah, I don't own a car anymore. Was an epiphany for me. I hope I'm sure I that guy does own a car now, because Uber and Ola are dead. Anyway, man, the hubris, the smugness, the ego, and the intellectual scarcity in the VC ecosystem, it's just amazing. It's absolutely amazing. But yeah, SATCOM permit may force Starlink to share info on illegal kits seized. So Starlink has got a SATCOM permit now, and with that SATCOM permit, it'll be forced to share info on the kits that are operating in India. Earlier, Starlink was refusing. It said that you'll have to go to the US Code of Laws to find that, and so on and so forth. So there was a legal tussle with the whole aspect of sharing information, right? But now the government has said, now that they have been appointed a license, the permit, they'll have to share information, and if they don't, they'll get a show cause notice, and the company's operations might just get hurt. So the problem is that India has complicated borders, right? There's Bangladesh, there's Bhutan. Bhutan is a friendly country, but there's Bangladesh and Bhutan, and the geo lat long doesn't really can't really effectively decipher between the borders and the countries, right? So there's a lot of illegal shipment that's possible to happen from neighboring countries, right? And if that happens, it's a security issue. And if that security issue is coming to fold, the Indian government needs to have that kind of input, right? So uh, now that they've interestingly, Bharti Airtel also has Eutelstat, OneWeb. That's also a Bharti company. But it's also going to be a distributor of Starlink, and SES Reliance is also in the same space, but they're also going to be the distributors of Starlink. So very interesting dynamic as far as everything is considered. Quickcom opts not hurting beauty business, aiding personal care, says somebody from Nika. So Nika is also quick fashion delivery, beauty delivery is also picking up as a vertical, right? I wrote about this recently. It's another one of the travesties, I think, as far as allocation of resources is considered, if not anything. So, but the point is that people were saying, how can you like deliver beauty products which are very, they have their own nuances in quick way. So she says that beauty is not the vertical which is actually getting a fillip because of quick commerce. What's actually getting a fillip is personal care. There's a 20% split there, and 20% personal care is essentially. So Nika is a beauty play. 80% is beauty, 20% is personal care, and she says that quick commerce is actually uh, uh, only helping, or let's say only leading to personal care. So RBI's next interest rate cut action likely in December. So RBI has cut the interest rate by 50%, and 50%, 5 0.5%, 0.50%, and now there's going to be a lot of action and growth in the Indian economy, right? Consumption and maybe even stock growth. Definitely stock growth. You might just see some upward momentum as far as the whole stock market is considered, and also so why they did that was consumption. They really wanted to spur consumption. Consumption has been a lump in the throat of the Indian economy, as as viewers of Thinkers Frequency will know. So RBI has cut the interest rate just very recently, Friday afternoon, and now they basically are, the next evaluation is going to happen way forward in December. So we're gonna wait and watch how this particular rate cut affects everything in the Indian economy, right? Uh, so General Electric is eager to power India's fifth generation fighter jet. Uh, India's fifth generation fighter jet. So Tejas essentially depends on engines provided by General Electric, and Tejas is manufactured by HAL, and that is in tandem with a lot of work which GE does. So they provide the engines, and there has been a problem with the Tejas shipment is considered. So there's been a delay of 2 years because of whatever GE is going through, the supply chain disruptions, everything has happened. And then also what's going on at HAL's end. So if you remember, we talked about this at Thinkers Frequencies earlier episodes, that Indian Air Force has flagged a serious problem as far as the air, squadron is considered, the number of planes is considered. So Indian Air Force is seeing a decline in number of active planes, and it has been flagging that problem since quite a while. And in fact, the Air Chief of India even named HAL, while saying that maybe HAL is not fit for the job because it's been a lot of delays from their end. So apparently GE is looking at speedy delivery of Tejas jets, engines, and then also looking at powering India's fifth generation fighter jet. If you look at what we are doing with Tejas with 404 engines, we're right in the middle of probably what matters most. The US and India enjoy a very strong, and so on and so forth. So that's going on. So let's see how that works. Should be good news for HAL, right? Mizuho to acquire Avendus from KKR at 700 million valuation. So Avendus is a homegrown uh, investment banking company. It's been doing a lot of work actually. Avendus has been instrumental in a lot of very solid deals. So they have total assets of 3,000 crores, total income 1,000 crores, PAT of 170 crores. So pretty healthy. And KKR has essentially it's getting an exit of 3x, 2.5, 3x, which is nice. So valuing the homegrown at 6,000 crores. And there's been a lot of negotiations as far as this is considered, but finally the deal is done. KKR is getting, if I'm not wrong, some 3x return on their investment. So that's going on. That's interesting. There's a company called Megha Promoter, Megha Engineering essentially, and they have been supplying pipes to municipal corporations, right? And they started their journey decades ago, 2 decades ago, 3 decades ago, and now they're a $5 billion empire. And essentially, they were going through a lot of crisis as far as ownership is considered. So they had a family feud of some sorts. So they were an uncle and nephew duo, if that's right. So uncle held 51% of the shares and 49% of this was with this other family. So now they're raising money and taking over uncle's share, and that's finally set. So all of these family battles, or let's say family settlement stories, are very interesting as far as the whole business ecosystem is considered, because a lot of Indian Inc., India Incorporate is still held by families, right? So if you look at the major institutions and even the mid-level institutions, they are family held institutions. And a lot of those family held institutions go through very weird dynamics sometimes. So we've discussed it. Viewers of Thinkers Frequency will know that we've talked about this, that how Mr. Sunil Kant Munjal effectively championed the whole succession planning thing at Hero, where he divided the Hero empire with by families. So Hero was founded by Brij Mohan Lal Munjal and OP Munjal and two other, Dayanand Munjal and the fourth person I'm missing. So all of those families, they had to be split up, otherwise the empire would have imploded, right? And that he planned it very well. So it was an exemplary execution of family business division. But even then, it didn't work out because Hero Electric was from a different family than Hero Motorcorp. And then Hero Motorcorp, despite seeing Hero Electric in that domain, entered that domain, which was against the constitution of Hero. So these things happen, and with Megha Engineering and Infrastructure, Reddy uncle nephew are finalizing a family settlement. This will see PV Krishna Reddy buy out Uncle Reddy's controlling interest 3 decades after the two started their entrepreneurial journey. So they started with pipes, and they must have. It's a very interesting business dealing with municipal corporations, right? A lot of corruption, but these people actually could grow in that market. Good for them. And now they've sorted out the feud. Chhattisgarh is seeing a 49,000 crore injection of projects, which is extraordinary, which is pretty solid stuff, right? So Chhattisgarh, for people who don't know, was ravaged by Naxal uh, Naxalism, essentially. So Naxalite movement was very strong in Chhattisgarh, due to which it's almost like terrorism, right? It's domestic terrorism inside. So it was very difficult, and the state was essentially, it was in dire straits. It has been in dire straits despite whatever the government had been trying, because you've got to solve these problems first. These are bigger problems. Finally, uh, if you've been following the political news, or let's say economic news, the Naxalism, the Maoist control of Chhattisgarh has died down, because virtually all of those people have been shot down, right? And now the state is Naxal free, essentially, which is historic, which is nothing short of monumental as far as Indian economic playground is considered, right? So now they're seeing 49,000 crores worth projects, a lot of dams, essentially, a lot of irrigation. So they are basically looking at 7 lakh hectares of land to get, the project. And the chief minister of that state has said that this should not just be a state project; it should get like a national project priority, which might just be the right way to go. The two projects will span Naxal affected districts, including Mungeli, Rajnandgaon, Kavardha, and so on. So, you know, it's solid stuff. They're going to make a lot of dams in Chhattisgarh now that the Naxals are gone. So, uh, Indian grocery bag getting bigger again. So, a research by some firm called Kantar, if I'm not pronouncing it incorrectly, Kantar, has conducted some surveys and some research, and they've said that Indian grocery bags are getting bigger. And how they've realized this is that they've asked people, and they've tracked Indians' grocery trips, which is weird, in FY24. Like they say that Indians made 156 grocery trips in FY25, which is almost the same as compared to FY24. However, there's a small value increment and also the PAX increment finds report, and they've come out with South Delhi, West Delhi, and all of those reports. I somehow smell some sort of, you know, it doesn't smell right. How can the trips number of trips can be estimated like that? This is very weird. So I read the report, and I was like, okay, sure, because just thinkers frequency viewers will know. Yesterday we discussed about the whole aspect of uh, judging the poverty rate, the threshold, and the poverty consumption. So we discussed yesterday that India has pulled out a lot of people out of poverty, right? And we were judging if that research is right. And we saw that consumption of 150 rupees or 250 rupees, $3. So the UN says that extreme poverty is $3 a day. Well, earlier it was $2.15 a day. And even that measurement was not easy. So now these people have come out that 156 grocery trips, pack size rising 16%, number of packs increasing 13%, shoppers now buy once every 56 hours, FMCG consumption twice the national average in South Delhi, West Delhi leading the spend at 39,000 rupees per year. I don't understand. How did they account for online shopping? Because if they say that it has led to 156 grocery trips, and that is the same as last year, how does that account for what's happening with quick commerce? That's what rung an alarm bell for me. That there must be something. Are they essentially tracking that as well? Because they've no way mentioned that. So they say the grocery trip and the bag value, but all that has actually uh, changed, right, in the last year or so. What do you think? I think there's a solid change as far as the whole shopping uh, modus operandi is considered, especially in South Delhi or West Delhi or wherever. So that's that. Anyway, KKR bagged IVI to buy Art Fertility Clinics for $450 million. So Art Fertility is essentially getting bought for $450 million when its revenue is somewhere around 100 to $120 million. So it's getting a revenue multiple of 3 or three and a half, 4, which is interesting, right? Because which is great because 3 and 4, I thought fertility clinics, they had a growing market. So it says Indian fertility clinic is 30% of this market is controlled by organized players, and India sees 3 lakh IVF cycles annually, and IVF market is expected to grow from 800 million in 2020 to 1.5 billion in 2027 at a CAGR of 15 to 20%. So the industry is growing at 20% CAGR, 15 to 20. It's at $1 billion right now. It could be of $1.5 billion by 2027. That's just in 2 years. The organized players are only 10 to 15%. The revenue multiple should have been higher, but apparently it's not, because a lot of other players who've been acquired have been looking at the same revenue cycle. So recently, EQT Partners acquired major stake in Indra IVF, at $1.1 billion valuation. And Indra IVF essentially had much better numbers. So that's the multiple that this industry is getting as far as the whole is it's considered, right? Which is interesting, because you would expect that some play like IVF could get a better multiple, right? So That's not the case. Probably it's a service business at the end of the day, right? So it can't get like product business multiples. What do you guys think about it? So, Southern hits fail to click in Hindi, lost in translation. The title Lost in Translation is actually a movie with what's the name? Groundhog Day. So the same person who did Groundhog Day essentially did Lost in Translation. Scarlett Johansson was in the movie. I'm forgetting his name. How can I forget his name? Uh, in translation, Bill Murray, right? Bill Murray. I'm sure. Murray. Yes. So I don't know how I could forget it, but Bill Murray. So Lost in Translation. So these trade analysts, these film trade analysts are saying, then Southern hits are not clicking in Hindi bed. So they say that these people are trying to make a pan-India film, and pan-India film is a myth. Nobody should be looking at making a pan-India film, but because essentially a film should be local, and it should have like a universal value, which people can go with. So what strategy has been with southern industry players is that they get some people from the north to act in their movies, right? And then it becomes a pan India film. But apparently that doesn't work out for people. A lot of these films have not been clicking with Hindi audiences because apparently the reasons quoted by the trade analyst is there's less escapism, and the story isn't really happening, and then there's been less marketing. But how many of you think that the cinema industry essentially is beyond saving now? What do you think? Do you think cinema as an industry has anything going on for it? I mean, that's a question we should ask, right? And then the following question is, what happens if the cinema industry actually falters? Let's say irreparably. What happens then? Because it's a real possibility. PVR stock is like down a year on year, some 30-35%. And I don't think that reflects how bad the situation is with PVR right now, PVR Inox. Because films just are not working out. Uh, People are not really going to the theaters anymore, and that's because OTT. So I wrote a research on it. I said OTT is the poison that the film industry has swallowed without knowing. So film industry should have protected itself from the OTT onslaught at any cost. But these Netflix and everybody came with a lot of money, and they started offering these, you know, services, and they started buying out movies. Even earlier there used to be a 180-day gestation period. So a film releases in the theater, and then at least 180 days it comes out. You remember films coming on TV, they used to have much longer gestation cycles. But with OTT it started getting shorter and shorter. So maybe a film which is right now here in theaters, in 3 months or in 2 months it's going to be on OTT. And that is not incentive enough for people to actually visit the theater, right? And it actually leads to a lot of problems. So Mr. Bijli, the CEO of PVR Inox, says that there should be a three-pronged approach as far as movie distribution is considered. First should be theater. Then it should be pay-per-view. So let's say theater window, then a long time for that theater window to actually have some sort of buzz. After that theater window comes the pay-per-view, when these movies get released on streaming platforms but for a charge, right? Where you can rent them. And then after that rental period is done, some gestation period, and then they should come to the OTT for free streaming. With that three-pronged approach, producers of films might just be able to recover a lot of money. But that is antithetical to the business model of Netflix and all these streaming players, because they want to catch on the buzz right when it exists. And that is gonna screw up the entire film industry, which is what's happening. Nobody's making money. Nobody's going to watch movies in the theater. Theaters, I don't know what happens to them, which is very sad because I'm a huge movie buff. Huge movie buff. Perhaps the biggest movie buff that I know. Certainly the biggest movie buff that I know. So anyway, uh, bad loan provisions increased in March quarter. Well, this shouldn't be a surprise for the viewers of Thinkers Frequency because bad loans had been growing due to the bottom of the pyramid lending of the NBFCs, the direct personal loans that were being handed out very, very quickly and many unsecured ways. The whole BNPL thing. Now that it's regulated, it's gonna go down. But for the period this happened, the bad loan provisions increased in the March quarter. So among 29 banks, provisioning 8.3 up sequentially over 9% year on year. Private lenders lead the list. So it's gonna go down now. But when this was happening in the heyday, it led to a lot of problems for the banking industry, right? So they had to step in and do a lot. We've discussed this in depth in previous episodes. So that's that. Mr. Gautam Adani drew 10.5 crore in pay in FY25. So Mr. Gautam Adani, the chief of Adani, drew 10 crores in salary, right? But here's a fun fact: Mr. Kunal Behal, and Rohit Bansal from Snapdeal used to draw like 50 crores in salary. How's that? How's that for a fact, guys? One second. Am I visible on YouTube? What's happening with YouTube? Just one second, guys. Uh, something wrong with YouTube? I'm sorry for this disruption. Just one second. I don't know what's going on with YouTube. Uh, Sorry for this. LinkedIn is fine, I'm sure, but there's probably something wrong going on with YouTube, though I'm not sure. It looks weird. Just one second, folks. Somebody messaged on YouTube saying I'm not visible. Yeah. Anyway, one second. We'll have to pause it a little. I don't know what's going on. Oh man. Uh, Please wait while I try to figure this out. So my YouTube screen just went black. I don't know why. Can hear you and see you on YouTube. Oh, thank God. Uh, Thank you, Mr. Amrit Raj. That's very nice of you. I got worried. I don't know. It's visible. Okay. So it was just me. Sorry. Anyway, so what I was saying was Mr. Gautam Adani drew 10.5 crores in salary in FY25, but Mr. Kunal Bhal and Rohit Bansal from Snapdeal, according to the disclosures, drew a salary of 50 CR. How's that for a fact, folks? Is that interesting for you? Huh? And then they were essentially running this now very popular VC fund, by also selling stakes of Snapdeal in the secondaries. So they were building Snapdeal and they were selling parts of Snapdeal while also withdrawing like a 50 CR salary from Snapdeal while Snapdeal bled money. And that was pretty interesting. But now Titan Capital is actually a pretty big player, right? In the VC ecosystem. Interesting. So, you know, as the rates have come down, viewers of Thinkers Frequency will know that with the interest rate coming down, the lending rate is going to come down, right? That's what happens. So, RBI interest rates decrease, the banks interest rates decrease, lending becomes cheaper. Lending becomes cheaper, capital flows in the market, things grow, spending happens, right? Good. But when the lending becomes cheaper, the deposit rates also need to go down, right? That's how banks are gonna make the net interest margin, and that's how banks are gonna save money, right? But the problem is that Indians weren't actually spending money. Uh, I'm sorry, Indians weren't actually saving money in the banks, which is what led to some serious capital issues, right, with the banks. So, with all the capital issues with the banks and with declining savings, banks had to actually make savings interesting so that people actually deposit money in the banks, right? Because Indians, what they started doing was they started stopping the savings account and they started investing every bit of money in equities because equities were giving them like 11-12%. Savings was not giving them enough, right? So now banks will have to be creative to get new savers. So they're giving like credit cards based on FDs and so on and so forth. They're going to come out with new and interesting ways to essentially boost up the savings because RBI has solved the capital adequacy issue for now. But now that the interest rates go down, what is the incentive for people to actually save money in the bank, right? Which is very interesting. If you remember, you guys, we discussed how Canara Bank increased the savings rate, compromising on the net interest margin, as an example for other banks, right? So that was pretty interesting, and that's gonna have more interesting turns right now. Uh, Higher interest income, falling cost of fund to improve lenders' profit. Sure, banking is gonna have a few good days, so banking stocks should be looking good for a while when this interest rate things happen. Banks may come out better in new regime as we discussed. We've discussed this a lot, and that's great because we've been able to follow what's happening. So banks have begun slashing lending rates. Friday this happened. Home loan takers, small biz to benefit. So banks lending rates are going to go down. So just to think about it, if lending rates go down, what kind of industries would actually flourish, right? Thinking from a stock perspective, because a lot of stock market commentators are thinking about how this banking is of course gonna might have a good day, although I don't know because if savings don't happen and sure, but cost of capital is reducing, so yeah, banks should have a good day. But who else? Who else should have a good day? Small businesses. What do small businesses deal in? This is how good thinking happens, right? So I can't do it on the fly, but yeah. Online prices in 12 cities to be monitored for the new CPI series. CPI is Consumer Price Index. Essentially, they are the ones who monitor the inflation rates and every bit of spending and consumer stuff. So they are basically looking at now online prices in 12 cities to for better monitoring. As I discussed in an earlier story, right, where the research from Kantar actually was judging uh, a, an increase in consumption basis grocery packs and grocery trips, and I was asking where does online fit in your thesis, right? And they had no mention of online in their research, and I smelled something wrong with that research, right? So that sort of that's vindicated by the fact that even CPI is now incorporating online prices in 12 cities for its monitoring. So that obviously should tell you something, that that research might have not been tight. as tight as it could be. Meta is in talks for $10 billion investment in scale AI. So Meta uh, is going heavy on AI, as is every big tech company. And very interestingly, Meta doesn't have cloud services or cloud credits to give to these companies, right? So Microsoft, Amazon, they are also funding a lot of, like, making a lot of big ticket investments in AI, but a lot of those investments are essentially cloud credits. So free cloud credits, right? That's what they offer. But what Meta is doing is it's offering straight up cash. So the startup was valued at 14 billion in 2024, and now it's looking at a $10 billion financing from Meta, and it's a data labeling platform. So experts in AI will tell you what data labeling means, and essentially what happens is, in order to for the because they're, as Mr. Arvind Srinivas, or Dr. Arvind Srinivas, the founder of Perplexity, said in an interview with Nikhil Kamath, I'm sorry, he said that it's all about throwing a lot of data, right? A lot of data, you just throw incredible amounts of data on the model and it trains. So apparently there's something called labeling. So if you throw that data but it's labeled well, the model is bound to function better. So that's something very interesting. And building on the story, essentially, Scale AI, whose customers include Microsoft OpenAI, provides data labeling services to help companies train machine learning model. As I told you, the startup was last valued at 14 billion, and Scale could now be valued at $25 billion. So quite an amount, right? Mark Zuckerberg has made AI a top priority, and company would spend $65 billion on related projects. So Llama, which is Facebook's, or let's say Meta's answer to OpenAI and everything, it has 1 billion users apparently. So Facebook probably counts even slightest of queries as a user. So they're saying that's 1 billion users for Llama, and it's very serious about its metas, its AI offerings. Although I tried using Meta AI, and I wasn't impressed. I mean, what do you guys think? Scale was founded in 2016 and has been growing quickly. The startup generated revenue of $870 million last year, and that figure can go up to $2 billion. So Scale is looking at a 10 revenue multiple, right? $2 billion, and it's looking at two and a half, $25 billion valuation for a $10 billion investment. So essentially, Scale is looking at 12 billion. So we just discussed the revenue multiple that IVF company was getting, and at 100 and $120 million in revenue, it was getting valued at 450 million. So that's roughly 3.5, but a tech company is getting $10 billion revenue. Shouldn't be surprising to anybody. Right? So UK is allocating 116 billion dollars to R&D. So UK is going full ballistic on a lot of new frontiers, or let's say old frontiers. UK is investing a lot in R&D and also defense. So if you remember, viewers of Thinkers Frequency will know that UK was renewing its investments in defense after a long time. It says we're not in a peace situation, but we're not in a war situation, but we're also not in a peace situation, said the official of UK. And that's probably, being looked at because the economy was in doldrums. So Reeves will divide more than 2.7 trillion of public money uh, between her ministerial colleagues, making choices that will define what government can achieve in the next 4 years. Department of Science, Innovation and Technology. Research and Development. That's pretty interesting. And Yeah, so pressure is on Apple to show it hasn't lost its magic despite broken promises to ramp up iPhones with generative artificial intelligence. So Apple stock is down 19%, folks. If you didn't notice, Apple stock is down 19%, and it's because uh, Apple's answers to AI haven't been that great, right? So Apple AI hasn't really made a dent, and that has sort of advertised a lot of features as if they were going to be available, and it just didn't happen. And Worldwide Developers Conference kicking off on of Monday in Silicon Valley, and Apple is under a lot of pressure. So let's see how Apple stock takes the route, right? It's gonna be interesting. What is your view on Apple stock? What do you think Apple is gonna be like in the age of AI and the hype of AI? Something very interesting, right? Auto sector is seeking government support on China rare earth magnet imports. So US has gotten some respite. Ford, General Motors, Stellantis, they've gotten some supplies. Europe is also getting it. Indians haven't gotten it yet. Indians are trying. And viewers of Thinkers Frequency will know that we discussed it very deeply, the whole rare earth magnet situation. Just 300 crores of shipment, but it's eating up. Geo widens revenue market share gap with Airtel. uh, Geo is at 42.2% and Airtel is at 39%. So very close, very close. But Geo has slightly edged ahead, and all while Vodafone is just bleeding, right? Vodafone is just bleeding. Yeah. So Geo has 42.2% while Airtel has 39.2%. And uh, Vodafone Idea is at 13.4%. I don't know how far this Vodafone Idea story is gonna go. I don't think it has any legs, right? But with the government holding 49%, it's bad news for Indian taxpayers. JAL creditors extend bid deadline by 15 days. This is especially interesting. So Jayaprakash Associates Limited was also a huge debt issue, if you remember. Folks will remember JP Group, the Noida Group, they did to Noida what DLF did to Gurgaon. They also had a debt problem, a serious debt issue, right? But that debt issue didn't balloon like, or let's say didn't shape up like what like how it shaped up for Mr. Vijay Mallya. So just yesterday I wrote an article about Vijay Mallya, Mr. Mallya, and the whole episode of debt. Similar company, very big companies have gone under and have taken debt and have faced a lot of problems. But mostly those companies have been very civil. They have not essentially fled the country and then hoped that when things die down they could actually give it a PR spin, which is what it seems like was the strategy or has been the strategy for Vijay Mallya. Speaking of strategies, Thinkers Frequency, this episode is coming to an end. I enjoyed it a lot. Thank you everyone who joined it. We've completed 2 weeks. This was the 15th episode. Daily dose of insights and analysis which don't lead to paralysis right before we start our day. It's a lot of fun, and I wish you a great day at work. Happy Monday. And sorry for the technical difficulties which happened in the middle. I'll sort them out tomorrow. See you. Bye bye.